Okay, crypto. This is a crypto big deal. As you can see, there's a sign of the above. Now I'm starting to learn a few things. Still haven't got a clue, and but I'm learning as I go along the way. Okay, so what I want to do is I want to talk to you about Bybit, and that's a thing where we've talked about how to buy Bitcoin. I'm going to stick with Bitcoin because of it is literally the safest one out there to really start with cryptocurrency. Once you start getting confident with where you see Bitcoin and how it works, we'll go through fundamentals as well at some stage. But I thought, there's what's a good thing that I like doing is where you can play around with some of your Bitcoin as well to try and make more Bitcoin. And it's about playing the market. Now, this is super risky. I am not a financial advisor. This is purely for entertainment, and I literally lose about 90% of my trades. So I am definitely someone that's not worth following. Okay, when it comes to advice or copy anything I do. Now, what I'll do is I'm just going to explain some of the things you see on the screen here. So I've got here, wrong thing, sorry. So what we're going to do, I'm just going to sort of explain what's at the bottom. So you've got, here you've got contracts, which is BTC, which is Bitcoin, US dollars, because it's all these absolute things. Now I've got $1,000, at the 33, just under sort of 33,300. Okay, so it's $33,291, and I've got a liquidation price, which means I would actually lose all any money, that £1,000, $1,000, sorry, if Bitcoin drops below that figure. But I'm going to explain the risk side of that. What I've actually done is I've 5x'd my money at 208. Which then gives me the 1,000. So I'm actually only putting $200 in, and at the moment you can see it's at the profit. So, but I'll explain where I had to start that from. Daily realized sort of thing. So and this is what I'm talking about with the stop loss. So what we've got is, as you can see here, the stop loss here. So the stop loss here is basically meaning that I've, instead of being liquidated at this price here at 278.59, means I'll only lose 32. If it goes below that, I'd actually lose about, it's basically about $5. It works out about 2 or 3%. I'd lose about $3 or $5, say, for argument's sake. So, and I got in at this sort of price here. But what I've had to have done is I would have had to set my limit order a lot higher. So to come down. So I was using this support line that's along the bottom here. Okay, and it actually did come down below. So I was actually losing money, and it didn't, go below my stop loss. And as that started turning to profit. So at the moment it's sitting there at about $10, and that was, space of, these are hour candles, so probably about an hour ago, 2 hours ago. So it's playing out all right. Now I'm looking. It's important to know when to get out. So I'm looking to get out around about here, because I believe that's where it's going to go. Because of this could quite easily, the idea is it could go up and then it could come back down, and it could go up and then come back down, and then it could shoot up, or it could shoot all the way back down. So it is a case of knowing where the market's going to go, and I've used these sort of trend lines here, as you can see, that the help to understand, where I think the market is. And you can see it, it has kind of worked out. Now, like this is, you sort of see this sort of market here, it kind of sort of sat in the market, and it's sort of shot, it's gone past the support, it's come over to here, and it's bounced off the support, and then it's stayed along, bounced along, because it would have gone up to these sort of peaks and gone down to this peak, and then it's gone up to this peak and down. So that's the sort of the way that it would have bounced around the market. It's not a great drawing. Let me do that again. So this one, so say this one closed here, so that would have gone all the way down to there, then it would have gone all the way to the top of that peak, then it would have come all the way down here, it's gone all the way up to here, down, sort of shot up to here, down to here, so you can see that the market is up and down, and it's knowing when to get out. So this is obviously a good time to get out, but you could have waited to get to about here, and then when it sort of came into here and started shot down, then you would have probably tried to get out, knowing that it's going to try and hit this support. But you could have waited as well, but I said it would have been a bad decision. So you've got to sort of know when to get into. It's all about having a strategy. Now, this bit here, this is me protecting my wealth. So you don't want to risk any more than 2% of your money. And when I come into put my fee, I only put in like 50% of what I'm holding. So I'm not even playing with my full stack that I have on bit by bit. So the idea is you only play with 2%. So I try to make sure that I don't lose any more than 2%, because that means it's only about $5. And it means if you're playing with $100, that means you've got 50 trades you can do before you get wiped out. Effectively, if you were to do it on a case-by-case situation. But effectively, your 2% would actually you'd be trading less, because you're only trading 2%. So you'd effectively get more than 50 trades if you're doing $100 at 2%. Now, the idea is that you can increase your stake by doing here. You can see I've done a 5x. So effectively, what I've done is I've got 208 that's in there, and times that by 5 is what gives you 1,000. Okay, so 5 times 2 is 10, 1,000. So that's what you're doing. But what you can see here is I've got liquidation price here as well. That means I will actually lose all of this money here. I will lose that if it goes below that price. So I don't want to do that, and that's why I have my stop loss set at this price, because it means that I'd only lose $5, and I'm thinking that I can see that bouncing off and going up to here. Now I'll be looking to get out about here. If it breaks through quite quickly, if it shoots up really quickly, I might look to try and hold it for a little bit, but I'll be ready. I might even then, if it goes up here, I will probably set a stop loss. I would change my stop loss to 34.6. So I know that if it did only come shooting back down, I'm still in profit and I still haven't made any losses. Okay, and it's really important to know how to set your stop losses when you're trading, because when you get it right, it's very easy for that suddenly you sort of see that, ride it all the way up, and then suddenly it could come all the way back down, and then I've made no money whatsoever. It's I've just seen it go up and come back out. So what you're effectively trying to do is you're trying to trade. This is where I'm talking about strategy now that can make you money, because it's knowing about it's. You don't make money until you take the profit when it comes to trading. So you get out here and you've made some money. So you made so it's $30. Yeah, and then it could shoot all the way back down, and then you could look to get back in again, go back up, make another $30. You've effectively just made $60 by making 2 trades, but that's because you've got a strategy. Okay, so you've set yourself a strategy. Now, there's nothing wrong with this. Could not make it all the way up there, and then it could shoot back down again. So again, this is where you need to you need to keep an eye on it. It's not a case of just put it in and then just hope that it will happen. So you need to sort of keep an eye on it, and then you're sort of looking at smaller time frames if you think it's going to do something different. If it's not doing what you think it's going to do, so again, just be careful. But like I said, you're only going to lose. Hopefully, you're only going to lose 2% of your income, and that's what's called risk management. Okay, so you'll hear a lot of these TA, so technical analysis and how to do trading, talk about make sure you have a risk management thing, and it's just them saying fancy way of just saying don't trade any more than 2%. And you get used to this because you start listening to them. They have all these bits of terminology, and they do it to make them sound very clever. And it does sound very clever, but it confuses the hell out of you, because it took me ages to work out all these terminologies, and they're just very simple terms. What I mean? They just make it sound more complicated than it is. So just be careful. So like I said, in here you can effectively do like a take profit as well, right? So I could put in here. So what we were saying about sort of 34,600. So I could put in 34,600. Okay, and then go confirm. And now means that if we get to 34,600, it will actually cash me out and I'll be in profit. So, but like I said, it could come down here, and I can also change my stop loss that I've got here. I could now move that up to where we've got, as you can see here, I got in at 33,291. I could effectively move that up to 30, 32, 33, you know, what I got into. But I'm not going to do that because it's, I'll tell you what, I'll change it to 33. I could have just typed it in actually, it's just a lot easier. 33,000, okay, and I would look to make a 4% loss, okay. So here you can see like it's a 4% loss, okay, if it cashed out, if it dropped back down to 33, okay. So that is risk management. So you'll see this will now change to, see here now, this should change to 33, and it will take out, it will come out, it will cash me out at 34,600. So if this shot up to about, here, I could maybe do my stop loss to 32, you know, maybe up to 33,300. So I know I'm not making any losses whatsoever, and I'd actually get paid by bit as well, because I've done a limit order with a post, but I'll explain that another day. So be careful when you're trading as well. Just remember, you know, the market can do all sorts of stuff. No one can predict the future, but you're looking for trends. And what I do is I tend to just follow what all the experts do. And they've all got different ways of trading, but I try and learn from them, and then I try and see if I agree with them, and just watch the market. You know, pretend to play the market, and go, right, okay, I was going to do that. Was I right? And then watch it. So then there's no, you know, it's basically like, you know, free play sort of thing. You sort of like play and go, right, I would get in at this time. Now, if you get it right a few times, you might start getting a bit over cocky and start going, right, I'm going to put money in it now. I've got it mastered. You will make so many bad trades, you'll get it so wrong, and that's why the risk management at 2%, don't risk any more than 2%. Like I said, you know, you've got your stop losses, you know, make sure you put stop losses in, okay. It's probably the most important thing you do. Loads of traders out there that you'll watch will say, I don't do stop losses because I think, you know, I know the market. Just ignore that for now, you know what I mean. Don't think it's just an ego thing. I'm pretty sure, you know, at the end of the day, you're trying to protect your wealth and you're trying to make more money. So don't think losing, you know, your money, you know, getting wiped out in one day is clever, because it's not. It's just it's too risky, you know. But if you take big risks, there is obviously big rewards to be made. But I would say don't risk any more than 2%. And it's such an easy thing to say, but to put it in practice, it's really difficult because of, like you said, you know. You can see here, this is like $11, which means it doesn't feel like it's that much, but it's still $11 rather than losing $200. And if it goes up to there, I might, you know, make $30, and it's a happy day. And if I could do that, if I did that, you know, 5 times a week, you know what I mean, then I'm looking at about £150 I've just made in the space of a week from doing, just using the same stuff I have. And also, when you're increasing it, it means your 2% that you're that you're prepared to lose, you know, that you're betting. If I'm betting 50% of my stake that I have in Bybit, will also increase because I've just added another 150. So now this 200 that I've put in will suddenly be 300. You know what I mean? So now I would then end up with like 1,200, 1,300, you know, 1,500. So that would now be another 500 I'd be trading with. So you can see how these small little increments can make a difference. So, like I said, it took me like a long time. I mean, I've been into crypto now for about 3 years. Trading, not so much. You know what I mean? I've watched it and understood it, tried to understand it as much as I possibly can for like maybe 2 years. But I've never really put it to practice for like last sort of 8 months or something. So again, just be very careful. Don't get wrecked. Stick to stop losses. Make sure you lose very little, because at the end of the day, you'll learn more from the mistakes that you make rather than getting it right all the time, or you think you're getting it right all the time and not learning why you got it right. It just seemed like gut instinct, or your risks will suddenly become, probably you'll start taking bigger risks because you think you get it right, and that's when you can get really wrecked. Okay, so be careful, stay cryptic, have fun, and anything you need me to talk about, my 3 followers that I think I've got now, sorry, please leave a comment, and I will definitely happily look into anything you want me to look into. But at the moment, I'm just sharing what I know, at the moment, which is, at the very early stages of people when they want to get to Bitcoin. Because I know myself, when I tried to get into it, it was very difficult to understand what half the stuff was done. Very clever people talking very clever words, and it made it very difficult to understand. But persistence, and it just slowly started to work in. And if I didn't understand something, okay, look into it more. But like I say, I'm absolutely passionate about this space. I think this is going to be like a kind of a Google thing, where it becomes norm to talk blockchain like it is about websites. It's just we're very early at stage. So it's 12 years old, Bitcoin. It's never been hacked. It's proved to be that it can be audited. It's got a digital trail. It does so many things where there hasn't been a fraudulent transaction on Bitcoin. Is an interesting fact for 12 years, and they reckon in the banking industry it's probably about 7 to 8%. So you think about the billions and billions of pounds that have gone through banking systems, and the I think it's billions have gone through Bitcoin as well. Not a single one has been fraudulent. Every single one. There's no double spend or anything like that that's happened, and that's where the banks realise. So these big institutions, they're not going to want to keep. They're not going to big up Bitcoin. They're not going to big up blockchain and stuff like that. They're going to keep it secret because they're all battling behind the scenes to get ahead of the curve, because of whoever starts getting this implemented into their business and to get ahead of the curve are going to be racing ahead. MicroStrategy is definitely worth looking at. A guy called Michael Saylor, and Elon Musk just admitted last night on this kind of group chat thing that he's got. I forget what it's called now. Said that he's a big supporter of Bitcoin. Now, that's when you start getting those people. That's when people start taking it seriously, and it's going to boom. It's going to absolutely boom when it does. And there is hedge funds talking about Bitcoin is change. But when I'll find some bits of news and stuff for you as well to back this up. Okay, just to kind of help you understand that if you are interested in Bitcoin and you want to learn more, you're doing a good thing. So this is where it starts, really. Okay, all the best. Stay cryptic. Thank you for watching, and I will be back tomorrow. Bye.